Hi, I wanted to reach out and just give a quick update on some international investing. Some of you know we've been looking pretty deeply to see if it makes sense to update our investment funds, kind of in light of the changing geopolitical landscape, but also changing monetary policy. Easy money's kind of gone. It's a lot harder to just have a passive investment and be happy with the returns. So we've worked with our investment partners, Fiduciant. I've talked to you about some of them, and we did a deep dive into international investing. And so we're making some changes. You may see some trades coming up in your Schwab accounts, and wanted to kind of touch base on what that looks like. So if we go back to anyone who's worked with me for a period of time, you know we've had an exposure primarily to dimensional funds. DFA does a great job of providing a low-cost passive approach to investing into different asset classes. So whether it's an international core fund or emerging markets fund, maybe international value, international small cap, DFA has a lot of great exposure, and you basically get thousands of securities in a very low-cost manner. Since the great financial crisis back in starting 2008, that has been the right approach. Hold the market as there's money floating around, interest rates are low. That's the best time to just kind of have the whole asset class, let it do its thing. But there's been a shift in the market, and that shift is driven by money drying up, monetary policy changing, and has led to elevated volatility. And so it makes sense at this point, at this stage in the market, to have a little bit more active management around your international and emerging market investments. And so let me give you an example. You think back to 2021. 2021, there was stimulus money, multiple checks that were paid out. Interest rates are at record lows, basically at zero. And it didn't really matter what you bought. You could buy large cap tech stocks. The NASDAQ had one of the best years ever. You could buy crypto, Bitcoin. You could buy NFTs. Then you may remember GameStop and AMC. Buying, Robinhood took off at that point. All of these different things, even Pokemon cards, were an investment that people made a bunch of money for. That's what happens when money's easy. Is it doesn't really matter what you invest in, just invest and make money. But now you look to today, all those things that I mentioned are really struggling and maybe worthless at this point. And that's all because now it matters. Now there's a cost to capital. To borrow money, you have to actually pay some interest, and there's less money that's in the economy. The Fed is not pumping money back in, both the Fed and global economies. So with all that, we need to make sure that you have the right investments. So what we've done is taken a look and actually have a couple of new funds that we want to invest in. We are getting rid of all the dimensional international exposure, unless there's some major tax consequences. So I'll touch on the actual execution here in a minute. But we want to buy a few actively managed international funds. So that's John Hancock Fund, a Dodge and Cox Fund, GQG Fund, and a few other funds that are out there that we will add over time to the portfolio to give exposure. Think about the global economy. When you're investing in international stocks, you have different types of government, you have different currencies, you have different regulatory regimes, you have different taxes, you have different levels of development. And so we want a manager that's not going to be asleep at the wheel and just buy without making any intentional decisions, which is basically what Dimensional has been doing, and that's their mandate. We want a group of managers that will intentionally invest with true information edge to actually go invest, knowing all of the complex landscape that's international. Now, flip over to U.S. stocks. U.S. stocks today still makes sense to keep dimensional as the main focus. We will still maintain our dimensional funds. At the same time, we are looking at, does it make sense to shift some of that out? And there's nothing that I want to recommend today, but we definitely will do that. So as we go to execute this, I am selling everything that's in a qualified account. That's an IRA, a Roth IRA, selling those international funds. And we're going to be buying next week back into those mutual funds, the new recommended funds. When it comes to a taxable account, a trust account, a brokerage account, really taking case by case, account by account, does it make sense to sell? Are there taxes generated? There's none of these that we say we need to get out immediately. This is the worst thing to be invested in. We have some time to be patient. But any new money that we put into international stocks and any of the money from the IRAs will go into these new funds that we have. Happy to hop on, talk to anybody about these changes, but wanted to give a quick overview of what you're going to see if you see a bunch of Schwab trades come across your email or arrive in the mail. Want you to know where that's coming from. So again, some changes, but nothing to be worried about. Don't be alarmed with the changes in the market or anything like that. This is truly a function of doing our job of maintaining the portfolio, watching to see what you have and make sure it works, not just in the past, but moving forward. So give me a call. I will talk to you later.